My portfolio consists of 13 companies. 10 of them are REITs, and the remaining 3 are the 3 Singapore banks. All the steps I've taken are basically how I screen for REITs to put in my investment watch list. REITs that pay out dividends once every quarter, and at the same time they have got very good business fundamentals. One of my favorite is Suntec City. So if you are at Suntec City during the weekends, so for those of you who see me there, please come out and say hi to me.
Hey JunYuan, hey, nice to meet you.
Hi James.
Thanks for joining this webinar. Right, glad to have you here today. So how are you doing?
I'm doing great, and many thanks for the invite. I'm looking forward to share with your community.
So to start off this webinar, right, do you want to give a quick introduction to the audience as to what you have been up to recently?
Okay, for those of you who are hearing about me for the very first time, my name is Jun Yuan, or some of you can call me JY for short. I'm a full-time retail investor and trader, as well as a financial blogger at the SingaporeanInvestor.sg, where some of the things that you find in this blog include things like company analysis, my reviews of the company's quarterly results, summaries of the company's annual reports, and also just general meetings that I attend. And also occasionally I speak at the various investor events where I share my experiences, both as a presenter as well as a panelist, which is something that I really enjoy. For I like to share my experiences with fellow retail investors to help them shortcut their learning curve. And recently, I've also published a book titled Building a Retirement Portfolio. And as the name implies, it contains the exact steps that I take to build my very own REIT portfolio.
Thank you for sharing that. All right, so maybe to kick things up a bit, so let us go to your very first investment. What was it and what did you learn from the experience?
Okay, I started my very first investment sometime around 2019 November. And believe it or not, I actually started my whole journey by being so-called forced into it. Why being forced into it was because because of my father's passing back in around 2016. And as executor of his will, one of the things that he has in his will is a portfolio of stocks. And back then, when I was handling all these, I have zero experience whatsoever about stocks. So, you know, I have no choice but to actually learn about investing. And also back then, I think there are very, very few resources out there that touches about investing. And most of the things that we see in the bookstores are dedicated to the US market. So it was a very, very tough learning curve for me back then. And it took me a very, very long time to actually learn about the nuts and bolts to actually get started and to help my dad, you know, to settle my dad's portfolio of stocks. And that's when, and then also as I went along, I found interest in this and I started my first investing back in November 2019. I still remember the stock was OCBC. That was one of them where I bought at 10.50. So I don't know whether it's called lucky or unlucky, because shortly after the COVID broke out and everything fell to a low. And definitely that was one of the toughest point in my investing journey, because, you know, just like everyone who was just starting out, I don't know for how much the stocks will continue falling. And of course, you know, back then I also felt fear. You know, to say that I'm fearless is just, you know, just lying. Yeah, I do felt fear, but then I keep telling myself that, you know, as long as the company's fundamentals continue to remain sound, I should remain invested. And also, it was also at a point in time that I should continue to start building. So I did add on a couple of companies that were trading at COVID low prices. And that's how I got started. Nice. Yeah, and got moving there. Yeah.
Okay. So you got quite a few bargains during the COVID pandemic.
Yeah, I got two bargains actually. One of them, three bargains actually. One of them was MPEG. Back then was called Maple Tree Commercial Trust, back at 157. But I know right now the price is like fallen below the COVID low. The other one I had was Fraser Centrepoint Trust, where I bought at 185 back then. And the third one was SPH REIT at 67.5 cents, as you remember. But then I've since sold back to Custodian Peak while they were, collecting back the shares back then, because I felt that in terms of growth, I think it's quite limited compared to many of the other REITs that I have in the portfolio. And I felt that back then, I think they were taking back for about 80 something cents or something like that. And I felt that it was a good value to take profit. I think there was about a 50+% gain, including distributions that I received as a unit holder throughout the period. Yeah.
Wow. So basically you bought quite a few things during the COVID itself.
Yeah.
So just now you mentioned about fundamentals, right? So what do you
correct.
actually look for in a particular stock or REIT?
Okay, when it comes to looking in a particular stock or REIT, the number one thing I think is very important is that you must really understand what the company or the REIT is doing, and you must actually understand your business. Let me give you an example like Sheng Siong. One look at it, you know that they are a chain, a supermarket chain. DBS, they are the biggest bank in Singapore, and most of us have an account with DBS. This compared to things like Venture Corp, where unless you are someone who is very, very familiar with the semiconductor industry or the electronics industry, you'll find it difficult to understand a company's business. So the number one thing that I look for is that the business must be something that I'm able to understand. And the second thing I look at is in terms of its financial results and also dividend payouts, at least a period of between 3 to 5 years, where it must display a stable upward moving trend. Because at the end of the day, when you build your investment portfolio, whether is it for capital gains or whether is it for income, I think you must see in order for a company to be able to grow its share price, its financial results must be able to grow. And also, if the financial results are able to grow, dividend payouts, more often than not, they will increase in tandem as well. And also, the next thing I look at is in terms of its debt profile, where the company should not be overly leveraged. So especially in times like this, where interest rates are at high and likely to remain so in the in the next couple of months or something. So I also want to invest in a company where they are not too overly leveraged. So if the company itself is a REIT, I will also look into things like the portfolio occupancy, where it must be at least 90+% occupied. Because if there are too many vacancies, then in terms of its financial performance growth, it's not going to do as well. So these are things that I look at.
You look at. Okay.
Yeah.
So thanks for sharing. So now let's move on to InvestingNote, right? So we actually have a couple of questions coming from there. So let me just share screen. So we did a poll. And then there were at least 95 votes. So a lot of them want to know about REITs, what are your portfolio highlights and your top US stocks. Right. So I've put the few questions inside this interview. So let me share one of it now. Okay. So the first question from InvestingNote comes from the dividend uncle, right? So can you share more about your personal life to spice things up?
Personal life. Okay, I actually don't really have much of a personal life, because I spend a lot of my waking time at work. Being a full-time retail investor and trader, I hold dual roles. So in the morning, what I do is that in the morning, first thing in the morning, I do is to compile summaries of updates of company developments in a new segment that I have called Equities Digest. So what I do is that every day I will provide 2 updates. One with the latest developments by companies in the US market, and one for the Singapore market, where I will send out to the followers of this particular site. For those of you who are interested, you can check out at the singaporeinvestor.sg/equities digest. So apart from that, I also look at the US market for opportunities as a trader for the night before. So normally what I do is that I will identify potential trading opportunities to take in the evening. And apart from that, I also spend an extensive amount of time doing company researches. And that's how I come up with all the articles in my blog. Yeah, and then also following up on the latest updates of news and so on and so forth. Yeah, and nighttime is back to the US market after dinner.
Wow,
I follow
so it's
the latest
entirely on the stock markets.
Yeah, and mostly on the Mondays to Fridays, mostly on work. And then the little time I have before I go to bed is some reading and probably just watching whatever that's on Channel U.
Channel U,
Yeah.
okay.
Yeah.
Channel U.
So for weekends, I try not to work unless or otherwise there are some speaking engagements and all that lah. So that's how I achieve my work-life balance. So I sleep in a little bit later, so I can sleep quite a lot until like 12 or something. Yeah, just
Wow,
take
okay.
the time to have to rest my mind. Yeah.
Then weekends, do you go to Fraser Center Point Trust or the
Yeah,
shopping
I
mall?
do. I do. So one of my favorite is Suntec City. So if you are at Suntec City during the weekends, sometimes Sunday evening. So sometimes you see me walking around with my family, my wife. Yeah.
Okay, cool.
So for those of you who see me there, please come out and say hi to me.
And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel, and ring the bell so you get notified every time I release another stock analysis video. Definitely. Next time, if we have the chance during a REIT symposium or any event, let's catch up again.
Can
Physically.
definitely we'll do. Yeah, we are always at a different session. Yeah, in the
Yeah,
morning and
different
the afternoon.
timing.
Yeah, correct. Definitely you must
Yeah.
catch up one day in person.
Yeah, can. Okay, so
Yeah.
next question from Frank50. Tell us
Okay.
about how you invest your money. So I recall you touched about you trading US stocks, right? And then you also
Correct.
invest in Singapore REITs. So can you sort of give what's the rationale behind this investment method or approaches that you have?
Okay, I started off with the stock market as a trader back sometime in 2017, 18. Yeah, I still remember back then I was started in the Singapore market first before I went to the US market sometime in late 2020. So I'm still relatively new as far as the US market is concerned. And why I started to build my own income portfolio in 2019 was because, as you all know, trading income can be pretty much inconsistent. So some months can be very good, some months can be quite lousy. And this is something that you do not have control over because how much you can make really depends on what Mr. Market wants to give you. So that's why I decided to build my own income portfolio so as to supplement my trading income. So because of this, the whole team is towards dividends, which is why right now my portfolio consists of 13 companies. 10 of them are REITs, and the remaining 3 are the 3 Singapore banks. And
Okay.
I'm also currently looking at restarting my US portfolio. And currently I'm doing a lot of background work on it. And I will share more in the coming months ahead once things are more set in stone and I have some more material things to share with the community. So for those of you who are interested, you can keep a lookout for it on an investing note.
Nice, nice. So, okay, so talking about REITs, so Nippon72 also asked, for, let's say you want to take 2 to 3 REITs for retirement, which one should someone look at? Which are the ones that you'll pick?
Very good question, actually. So when it comes to the word retirement, so I take it that when by the word retirement means that you do not have any active income, so you are relying your day-to-day expenses from the income that you get from your investments. So with that in mind, I think it's very important that the companies that you choose to build your portfolio is one that pays out dividends on a more frequent basis. So it's like quarterly basis. So with that in mind, there are 3 REITs that pay out dividends once every quarter. And at the same time, they have got very good business fundamentals where the financial results have recorded a steady growth over the years. And they are the 3 Maple Tree REITs. First is Maple Tree Industrial Trust, Maple Tree Logistics Trust, and Maple Tree Pan Asia Commercial Trust. All 3 of them pay out the dividends once every quarter. And especially if you do not have active income, I think that you will find this quarterly payout very, very useful because it gives you a stable stream of income coming in on a more frequent basis. And if I can share another company that is not REIT but pays out a dividend on a quarterly basis, and that company is DBS, where over the years, its dividend payout has been on a stable upward moving trend. And it's also one where for those who want a stable income for retirement, he or she can consider. Yeah.
Okay, thanks. So maybe one follow-up question from myself. So MPAC, I remember they have properties in Hong Kong, right? So do
Correct.
you sort of look at the risk that is coming from Hong Kong itself, and then, like maybe, you shouldn't use that for retirement because, there's the risk of, valuation decline and things like that. Yeah.
Yeah, very good question there, James. I think as far as properties in the REIT are concerned, of course, you cannot have all the properties that the REIT holds to be very, very good. And that is why diversification is very important, so that one property does not derive like all the income that the REIT have. So with regard to your question, as far as MPAC goes, 60% of its revenue is derived from its Singapore portfolio. Hong Kong, that one property in Hong Kong, which is Festival Walk, contributes just 20% of its revenue. And that's number one. Number two is that if you look at the financial results for the 4th quarter, you will notice that Festival Walk is already starting to contribute towards the REIT's distribution payout. And that is comforting to hear. Personally, as an investor, because you see that things are somewhat stabilizing in terms of its office component. They have a very, very high occupancy rate. If it's not 100% occupied, I think it's 90% occupied. The same goes for its retail malls, and it's also located at near transportation nodes beside the university, if I'm not mistaken. And I think they are in a very good position. And maybe if I can share a bit more, some are a bit hesitant to invest in the REIT because of its 2 China properties. But these 2 China properties, if I'm not wrong, they just contribute about 9%, if I'm not mistaken, about 9% of its total revenue, which to me is very small. And also, in terms of the tenants wise, they are all in like the telecommunications, information technology industry. So I do foresee that to recover in time to come. Of course, it might take some time, but I do foresee China to recover in time to come, because after all, China is also the world second biggest economy in the world. So that's my personal opinion on MPEG.
Wow, cool. Sound very knowledgeable.
Thank you,
Okay.
thank you.
Another IN user going by the name of GKEL. Okay, so he asked, do you place equal allocation to MPEG versus CICT? So how do you split up this allocation? And maybe within the REIT space, how do you split up the allocation? Yeah.
Okay, as far as my portfolio building is concerned, you can check it out. Check out all the holdings that I have at this point in time, and also the weightages of each and every one. Of course, right now, they are not of an equal weightage, because I do average down from time to time. But my eventual goal is that all of the holdings have to hold an equal weightage for diversification purposes. And as far as MPEG and CICT goes, both of them are so-called what I like to call same, but different in terms of its geographical diversification. As you can see, for MPEG, they have properties in Singapore, Hong Kong, China, Japan, and South Korea. But as far as CICT goes, CICT has properties in Singapore, Germany, and Australia. So by investing in these two REITs, I am having, in a way, more diversification in more countries. So in a way, it also so-called protects me. This kind of diversification.
Cool.
Yeah.
Yeah. So, okay. So maybe another follow-up question from me.
Can.
What do you think of REIT ETF as opposed to, investing in individual REITs versus REIT ETF?
This is a very, very good question. And I think it was also asked before during the REIT symposium that I was in. Okay. I think whether or not is it investing in the REIT ETF, or whether is it investing in individual REITs, that will depend on, number one, how much time do you have to study about the individual REITs. To me, buying into a REIT ETF is like buying into a set meal. Like, like when you go into McDonald's, you can choose a set meal. Investing in the ETF is also the same thing, where one move gives you an instant diversification into a basket of REITs that is that makes up of this ETF . But and then of course, when you invest in an individual REIT, it takes a lot of work to study the individual companies in terms of its financial performance, in terms of its debt profile, portfolio occupancy profile, and also its distribution payout. But of course, the con side of investing in the ETF is that you have no choice as to the REITs that are in this ETF. Some may not be REITs where it passes your investment criteria. So of course, that's something
like the
that
set meal got some things you don't like inside.
Correct, you don't like. Yeah. Then you either,
yeah.
you can't do anything about it. But of course, for people who do not have the time, investing in the REIT ETF is better than doing nothing at all.
True,
Yeah.
correct. Okay, thanks. Yeah. Okay, the next, the last question from IN, right? Coming from Binary. So what makes you decide to be a full-time investor or trader since you're not financially independent?
Well, I've been waiting for this question. I was expecting people to actually ask me this question. Yeah, correct. Yeah, okay. With regard to this, it's like there is no prerequisite that one has to be financially independent in order to become a full-time trader and investor. It all depends on your own comfort level. So for me, I went into it purely because of number one, I like trading investing, because it's so dynamic. Things change every day. No doubt people say that, oh, historically this, historically that, but there's always something different every day, and there's always something to learn from every day. And I really like it. And number two is because of the challenge as a full-time investor and trader. So I think a lot of things is also about what you want in your life, and also in terms of mindset lah. And then, I mean, everyone who wants to go full time into it, they can do so as well. But of course, I mean, there's also a lot of things into this. I mean, that you need to consider in terms of income, in terms of things like
Emergency
because it's
fund,
like income is like emergency, like income is like how much is
safety
enough.
net. Yeah,
How much enough. Some people is happy with one plate of fishball, one bowl of fishball noodles for a meal. Some cannot. They must go into a food court. Some cannot. I
Fine
must go
dining.
into atas restaurant. Yeah. So depending on that, then the requirements are different, man. Then and the kind of decisions that one makes at the end of the day is also different. Yeah.
Correct.
So there's no right or wrong answer, and one really do not have to be an FI.
Yeah.
In order to
but
go into
at the
it
same
full
time,
time.
I think I think that you are also treasuring your time building up your own website and things like that, right? Your newsletter and all that.
Yeah, I really enjoy that. I mean, at the end of the day, if it's not because of people like you guys who give me all the support and encouragement, I wouldn't be here today. Yeah, and for that, I'm really, really very thankful.
Yeah. That's why you're the most popular member in InvestingNote.
It's also because of everyone's support, really, and this award belongs to everybody.
Okay, nice to hear that. All right. Okay, so we have a few more questions to go. All right. The next question is, what investing tools do you use? Like, for example, when you come out with your newsletter, when you research about US stocks or Singapore REITs, right? Do you have any tools that you use personally?
Okay, for my company analysis, let me talk about Singapore companies lah. I do manual analysis through reading of the company's annual report over a period of the last 3 to 5 years. Of course, when it comes to reading a company's report, I do not read from cover to cover like a novel. I zoom into a few sections lah, so maybe for the benefit of everyone. So let me share with you a tip of two how I read and analyze annual report. Number one, the first section I'll read is the first few pages where they talk about highlights of a company's most important financials. And then number two, I zoom into the chairman and CEO's statement to shareholders, where they talk about a review of the company's latest financial results. And for the case of the REIT, they do talk about debt profile and also a portfolio occupancy profile. And another thing that I can find in the company's report is, the chairman's statement is in the challenges that they face and how they encounter them and how they navigate through them, and also some of the notable developments by the companies, as well as what they are going to do in the years ahead, which is very important actually. And also another, if the company is a REIT, another thing that I will look at, I will continue to read is the REIT's portfolio occupancy. In terms of its occupancy level for the properties. So if I do see that one of its properties is having a very low occupancy rate, I will send an email to the investors relation to seek some clarification regarding it to make sure that it is not a potential red flag. Let's say if the portfolio occupancy is like at a low level, but at the same time it's contributing just 1 or 2% towards its overall gross revenue, then I think I'm not too concerned. And last but not least, my last focus is on the financial statements. Particularly, I look at its income statement, its cash flow statement, and its balance sheet to make sure that they are fundamentally sound. Yeah.
So how about for the US stocks?
For the US stocks, I do use a tool such as Seeking Alpha. It's actually very comprehensive, and it provides the financial statements in terms of the figures over the last 5 years. I mean, you don't have to pay; it's free, and I use it to research on the US companies lah. And basically, when it comes to researching on US companies over the last 5 years, at least 4 out of the 5 years has to report a positive, improvement in terms of its total revenue and net profit. That is my requirement at the bare minimum, among other things lah. Like I do look at its debt profile. Of course, I must make sure that it is not too overly leveraged. And as far as dividend is concerned, I'm not really into it because, as you all know, as far as Singaporean investors investing in a US stock is concerned, all dividend payouts are subjected to a 30% withholding tax.
Withholding tax, yeah.
Yeah. So the end dividend that you get at the end of the day, it's not quite worth it. So my focus when it comes to investing in US stocks is more towards capital appreciation.
Same, yeah.
Yeah.
Okay, so seeking alpha is one tool. What about the other one?
Seeking alpha, the other one? I'm using seeking alpha, just seeking alpha to do my research. Yeah, correct. Yeah.
Realize US stocks. Understand.
Yeah, correct.
Right.
Because US stocks can be very difficult to read the annual report because it's very wordy and I can understand. So that's one of the ways to actually shortcut your research lah.
Process.
Correct. So, but then they also don't provide things like if the revenue is falling, for example, they don't provide reasons why. So that is when I will dig into the annual report to find out reasons why there is a potential fall in its financial results. Yeah.
Thanks for sharing. Okay, so the next question I have, what is your advice if you were to go back in time and tell your younger self? Okay, what advice do you have?
Is to start investing early. Because the thing is that when I started investing back in 2019, I'm already 39. I was already 39.
But you review your age like that.
Yeah, it's okay. No problem.
Guys, it's okay.
Guys, it's okay. But the thing is that for one to achieve financial independence, it takes an average about 15 to 20 years. So let's say if I were to start building, back then, 2019, at the age of 39, I will have to wait until I'm 59 and taking a lot of effort before I can be so-called financially independent. And also there is no guarantees here because anything can happen from now till then. Maybe you might need even more years, maybe less, but on average it's about 15 to 20 years. So if I were to go back in time, I think what I will do is that I will start to build my investment portfolio in my 20s. And I really encourage people who are, still in their 20s to start doing, because time really, really is your friend when it comes to investing, especially when it comes to building a portfolio that gives you enough dividends, a good capital appreciation for you to really become financially independent.
Compound interest, young.
Yeah.
Compound.
Yeah, correct.
More.
As to whether or not you want to retire early, that's another matter altogether.
That's cool. Yeah. All right. So last one, yes, your book. So I noticed that you have this book, right, called Building Your REIT-irement Portfolio. And let me just share screen over here. So so I noticed that you have written a post on your own blog talking about how your REIT book has made the way to the bookstores, Popular and Kinokuniya, right?
Right now it's just Books Kinokuniya, and still pending Popular at this point in time for Popular to bring in the books lah. But it's also available in Malaysia in Popular, MPH, Books Kinokuniya, and Sutaya Books.
Nice. I can see your wife also very supportive.
Yeah, she's very supportive. Without her support, I don't think I will make it to this far.
Yeah.
And
Okay,
I'm
so
really
if let's
thankful
say
for it. Yeah.
for all our readers, right, who want to purchase it online, we can get it over here, like this link, right? At this
Yeah.
Kinokuniya link or your own digital link, is it?
Digital blog, and
Yes.
also there's also an option to buy the physical book where I will be doing the fulfillment. But for
Oh,
those
okay,
of you
okay.
who want to buy, outside of this blog, they can visit Books Kinokuniya in Ngee City or Bugis Junction, or they can also buy on Shopee.
Oh,
I
they can
noticed
buy
that my
from
book,
Shopee.
yeah, so you can collect your
Nice.
coupons and then purchase the book.
Okay, okay. And so maybe can you just do a quick rationale or like the reasons why people should buy your book?
Okay, this book is written especially for newbies who want to start building your own REIT portfolio. The reason why I wrote this book was because right now in the marketplace, books dedicated to the Singapore market are quite few and far between. And also, I've received a request from many of my readers that they would like a step-by-step instruction on particularly what I do to build my very own REIT portfolio. That is why I decided to embark on this writing journey to write down on all the steps I've taken. Basically, how I screen for REITs to put in my investment watch list, and also some of those questions that people have as far as REIT investing is concerned. So I do have a chapter that's dedicated to it, where I share my answers to those questions, those burning questions. Yeah.
Okay, cool. Okay, so for those who are interested in buying the book, I will leave the link down below in the description. All right. So okay, thanks for joining this webinar again. Thanks, Jun Yuan. Right. So any last words for our readers?
Last words is still basically pretty much the same as the advice to my younger self, because I think that it's very important to get started as early as possible. I mean, this is a very long journey, no doubt, and you will meet with difficulties along the way. I'm not trying to, say that it's all rosy and things like that, because it is not. You are bound to struggle. You are bound to make mistakes. That's okay. And so for those who are worried about losing money, so what they can do is to start small. Start with a few $100s. Like, let's say a REIT like Maple Tree Logistics, for instance, is trading at one plus. So the minimum amount is about 100 plus because of 100 shares minimum, which is quite okay. And also the thing is that for those who think that by keeping your money in the bank and not doing anything, you are protecting yourself from losing money. That is not true, because even by doing so, your money is being chipped away by inflation. Because if you can see from the inflation stats as in April, right, the inflation rate in Singapore is at 2.7% as in May 2024, according to tradingeconomics.com. So by not doing anything, your money is also losing value at around 2.7% every single year. Of course, if inflation were to go up, you will lose even more. So, which is why it's very important to invest and make your money grow. So, in terms of income, you can generate income that can provide for you after you are retired.
Okay, thanks a lot, Jun Yuan, for joining again. Okay, so if we get a chance, then let's catch up again physically.
Definitely will do. Thank you so much, James, for the invite. And I really hope that the content I've shared is really useful for your community. Thank you so much.
Yeah, I believe so. I mean, since there are so many votes and questions coming in from InvestingNote. Okay, thank you.
Yeah.
See you next time.
Thank you so much. See you next time. Bye.
Thank you. Bye-bye.
Bye.
Before we end off, if you find the video helpful, I will appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.